Let's do some trading and let's talk some tech. Nancy Tengler joins us this morning. Let's talk some Broadcom and more. Nancy, it's always great to see you, CEO and CIO at Laffer Tengler. Appreciate you being here.
Oh gosh, Oliver, it's so good to be with you again.
Broadcom seems like a sort of blast from the recent Nvidia past, where when that stock was first taking off, you'd get these massive price moves in the shares, but the valuation would actually go down because the earnings were so big. And from what I can see, that happened to Broadcom too, right?
Yeah, absolutely. You know, I think we've talked about this before, that we've referred to Broadcom, which is a long-term holding for us, member of our 12 best ideas. We've referred to it as the poor man's Nvidia. And in fact, I think it finally graduated. The guidance that Hock Tan gave was unexpected, and because he hasn't really done that in the past, but also explosive. And his enthusiasm is really what drove the stock.
Okay. The potential here for a kind of broader market trade to repeat the first half of the year when Nvidia was basically driving all the semiconductor stuff. What do you think the odds of that are? Because other than like Broadcom, the semis trade has been pretty slow for the last couple months.
Yeah, and I actually think that's okay. I mean, I think we need to consolidate from time to time. If you look at NVIDIA's backlog, if you just kind of pay attention to the anecdote, like the one that Larry Ellison shared, where he and Elon were at dinner with Jensen and just kept saying, please take more of our money. I think if you pay attention to who's spending and how much they're spending, that the stock will rally again. And if you look at it, your point was absolutely correct, that as earnings went up, you know, the stock price went up, but not as much. The PEG ratio, price earnings to growth, on this particular name is just a little bit over 1 times. And I'm speaking of Nvidia here. So, you know, you compare that to Tesla, which, by the way, we also like, and, you know, it's trading above 4 times. So there's plenty of room. I think, you know, recalibration is never a bad thing, and it gives some, you know, those who aren't in the stock a chance to get in, and those of us who own it, we just actually added to our position. I think it was last week or the week before.
I love that the way you describe it was kind of the poor man's Nvidia, not anymore after graduating from this report. The potential growth from AI, it seems too, is important to see it in Broadcom, because these are, you know, very different products than Blackwell and stuff. It sounds like we might have finally found a real, like, tangential trade.
Yeah, well, and also don't forget, half of this company is software, and Hock Tan has been kind of masterful in previous acquisitions. CA Technologies, which used to be Computer Associated, he acquired that in 2018, and it was an accretive acquisition within a year. I mean, you don't see a lot of CEOs able to pull that off. VMware, kind of the same thing. You know, it's ahead of schedule, the integration, and that adds depth and breadth and fills in the gaps when the cyclical semiconductor business, you know, kind of wanes. So I like this company for the long term for a whole host of reasons. They raised the dividend 11%, a little slower than the past, but they're using free cash flow to pay down the debt on the VMware acquisition. So I don't, you know, I don't think you can argue with Hock Tan about anything. We call him Hock Tan the man.
I love that. He's also got a pretty great record of picking the right companies to include into his own. To your point with VMware, now that they've got big revenue growth coming and they're breaking free of whatever kind of debt overhang one might have been able to argue, do you feel that they might be looking for other potential acquisitions, or do you think they got enough on their hands trading the AI market on their own?
I think he's always looking, and I think that's a good thing. When you have his track record of integration, I think it makes sense to do acquisitions and even bolt-on, but he's actually done big acquisitions historically. So right. I think he was asked that question on the call, if I recall, and he just said, basically, we are always looking. And that should not scare shareholders. You know, Wall Street, if it's not their idea, they tend to punish the stock in the short term. That's actually when we got into the stock in 2018, when they did the CA Technologies deal, and Wall Street was up in arms, and that gave us an opportunity. We've held it ever since.
Okay. You mentioned the PEG ratio for Nvidia, for Broadcom. Where is it at?
I think it's about the same. I don't have it handy, but I think it's pretty close to the same. Yeah. And, you know, now we've got another $1 trillion company, which is just kind of mind-boggling.
Whereas like a Tesla, your PEG price earnings of growth is like what? Like it's like 3-4 times what Broadcom and Nvidia are going to be.
Yeah, about 4 times. Yeah, wow. And you know, that's a story stock. It's an icon stock, and it's an AI stock as well. But if you look across the board, you know, the big beneficiaries next year should be the software providers. So think Microsoft, Amazon, and Google, and their PEG ratios are pretty normal, 1.2, times, 1 times. So we've been adding. We just recently added to Microsoft. We've been selling all the names in July. Early July, not because we knew there was going to be a tech summer swoon, but they just got way overweighted, including Broadcom. And then we've added back to some of them, and one of those is Microsoft. Amazon's our top pick for the decade. We gave that in an interview in 2023, and we think it continues to grow pretty robustly.
Great stuff, Nancy. Appreciate the data, the facts, and the perspective as always. Thank you very much.
Thanks, Oliver.